Quick rundown of what's happening in the overall market. Let's dive right into the technicals. Recently, the SP 500 broke resistance and set higher highs in the micro. Based on the charts, immediate resistance would be at $3,900. The daily RSI is right at 50, which is typically the midpoint before determining a trend. In a recent video, we called out the likelihood of a stock market rally and how we could see the SP 500 at around $4,000. This was based on major moving averages, the overall downtrend, and the market setup leading into that rally. Technicals still support this theory, but there are three major headwinds that make me believe that the rally will soon end. Headwind number one is corporate earnings and price action. So far, three mega cap stocks have reported their quarterly earnings for quarter three. They include Google, Microsoft, and Meta, which was previously known as Facebook. And all three of these mega cap companies are down. Google stock saw its biggest daily decline since the pandemic, and Meta stock is down over 20% in just one day. However, surprisingly, the market has not dropped off of this news. This would suggest that something else is controlling the market because the market is looking past these bad earnings. That brings me to my next point, headwind number two, which is bond yields. The stock market is being controlled by the bond market, which is being controlled by the Federal Reserve. Simply put, as yields drop, stocks rise. If yields rise on bonds, then stocks drop. They are working inverse of each other. This can be seen if you take a look at the 10-year yield index, which trades under ticker symbol TNX. That yield has fallen from its highs. During that decline, stocks have rallied. However, take a step back and look at the overall trend for bond yields. It's up and to the right. It's an uptrend. Pullbacks here and there are normal and they are to be expected. And right now with the 10-year at around 4%, it's currently at support because this level was prior resistance. It's also at a 50 on the daily RSI. If trend was to remain, you would expect a bounce at around these levels, and that would likely lead to a pullback in stocks. Now we mentioned that the S&P 500 and the 10-year index are both at 50 on the RSI. This is an inflection point. So the next week or so will be crucial in determining the next trend for bond yields and for stocks. And upcoming, there are a few major catalysts to watch which will impact stocks and bonds. Headwind number three is the economic data that we're about to get. First is PCE, which is going to be reported on Friday. PCE is the inflation measurement that the Federal Reserve uses to determine rate hikes. If it comes in hotter than expected, it's less likely the Fed will pivot and therefore bond yields should rise. The second big catalyst is the FOMC meeting, which is going to happen on November 1st and November 2nd. On November 2nd, we're going to get the rate hike decision following that meeting, the dot plot from that meeting, and a press conference from Jerome Powell. All three will control the narrative of a potential Fed pivot. If they gave us no signs that they plan on slowing down, I would expect yields to rise and stocks to fall. In my personal opinion, I believe that the Federal Reserve will remain hawkish. Personally, do not think we have the economic data to support a Fed pivot because I think inflation is still out of control and not contained. Combine these factors together, it is my opinion that there is a high probability of a pullback in stocks soon. Now, money can be made on both sides of the trade. If you're interested in live trade alerts, you can join the private Discord. Link is in the bio. This week we had a trade that posted 140% returns, and in the last 2 months we have had over 10 trades that have posted 200% returns or higher. Here are some examples of those trades. Now that concludes this video. Drop a comment with your market outlook and I'll see you on the next one.